Right, we're back. How ESG is disrupting boards and CEOs' agendas. Let us hear introductory remarks by the moderator of the discussion, Jeff Scott, member of the board, Independent Directors Network, INSEAD, Chairman, NatWest Depositary and Trustee Services Limited.
Thank you. Well, before I start, I just wanted to say how uplifting it is actually to be sat here and to have listened to this morning's presentations and seeing how consistent and between the regulators, the politicians, industry, and the whole idea of listening to youth, which I think is a fantastic accolade and gives Cyprus a real hope. And I think, but the challenge that we've got that is on the board is that in real business, managers of businesses, CEOs and boards have got a new disruptive influence. And ESG is not new news. It's been around for, feels like ever. But what we're seeing now is the impact of not doing enough. We're seeing the impacts every day. You're seeing it from the wildfires very locally here and across the world, from floods in the States and in Germany. And you're getting a response from people who are living in the environments to be able to say, why is this happening and why are people not making bigger and better decisions? So that demand for change ultimately falls on companies and boards, but that's a real challenge. I think you heard earlier on, I think William was mentioning the alphabet soup of things that you could measure, the way in which businesses could be redefining what it is they measure, because they've, in the main, got to their positions and are running boards because of working on the old metrics. You know, we'll deliver things at the highest quality at the lowest price, and we won't necessarily look at all the risks that we face in a climatic environment. So how are we going to manage that? And I'm very fortunate to have on the panel today people who not only manage those decisions on a day-to-day basis through the boards that they sit on, but others who also advise governments and industry leaders on the things that will really try to make a difference. Because I think we all have to avoid, I think what Greta Thunberg said earlier this week was the blah, 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 and really have something that is concrete and actionable. And I love Mariana's presentation earlier on today, which talked about this need for critical mission statements, things that galvanize people, things that are simple to understand, things that give people a real sense of purpose. So I think there are some actions there that I think can be taken forward. But before I go in and ask the panel their specific experiences, I wanted to touch on some of the things and get David to answer some of the questions. When he spoke earlier about the market being broken, that this idea of price we're not accounting for the idea of the social and environmental governance impact. How do we give boards the right signals? How do we enable people to make good decisions when the metrics they've got currently are poor and the demand side, the idea of what customers are saying, is not getting through in a very clear way? So, David, can I ask you to skip?
Yeah, sure. I suppose, that it's really difficult for CEOs and boards of any organisation at the moment because not many know really what the investors and consumers care about, because there isn't a way of us as individuals communicating that. But what we have seen with certain boards is individuals in the boards and in their teams starting to engage with their specific investors, even if it's not the investor community as a wider network, and their consumers to really understand, normally across the structure of the SDGs actually, what do the consumers care about and what do investors care about? Therefore, what actions should I be taking to recognise value from my retail perspective or from my investor perspective? I think the other thing that CEOs and boards struggle with at the moment is actually there's lots of things that can go wrong. At the moment, the more I look as a CEO of a board into my supply chains and the impacts that I'm having and report those, the worse I look compared to someone who isn't bothering looking. But also as an asset manager, if I really identify the transactions or the transition assets, so corporates that are bad at the moment, they're going to become good, and I spend a lot of time finding those and working out how I'm going to help with that transition. If I'm on a fund range website, I look bad from an ESG perspective compared to someone who's just invested in the highly rated stocks. So there's a number of things around the communication with the investment and the investment community and the communication with customers about what you're trying to do and why. I think the other thing is this risk about greenwashing. So there's an awful lot of risk at the moment as a CEO. There's huge amounts of unexploded reputational ordnance. So bombs that can go off on my supply chain at any point. And at the moment, I've really got no idea as a board member what those things are. And whilst I'm reporting at the moment, I'm not being really clear about my known unknowns. What are the things that I know about in my supply chain that I really haven't got a clue in terms of the impact that that could have on me? So I think there's some ways that actually the boards can start to really be clear about the importance of transparency, but also then start to communicate with their supply chains and their investors to start to connect, to connect that sort of line of sight, which means that they can start driving different behaviours through their entire business. I suppose lastly, and then I'll shut up, sorry. I suppose the other point is employees. Interestingly, an awful lot of employees, especially more junior employees, really care about purpose and on what an organisation's doing. And engaging the population that sit within your business as well is really insightful in terms of working out what do the people that work for you care about and what do new recruits care about, and therefore starting to shape your strategy in line with your employees, your investors, and your consumers. I don't know whether that helps.
Yeah, it does, and I think, but just giving that clarity that said this is not about reinventing the wheel. You mentioned the SDGs there, so I think everyone gets that if we could do something against those 16, 17 initiatives in a way that people could understand, then that's the framework that we should be using. But I know you've also talked to the World Economic Forum and their 4 policy objectives, the people, prosperity, etc. And how, rather than reinventing the wheel, is there a way of pulling that together?
Yeah, I think, interestingly, if you look at the World Economic Forum pillars of, people, prosperity, principles of governance, planet, and, look at the way the SDGs fit together under that, actually, it neatly, there's sort of 4 that fit under each one of the pillars. And so if you think of the SDGs as a sort of a country level view, and the pillars as more of a corporate view, being able to bring those together in a coherent way actually creates a relationship between what a country's doing and what the company's doing within it. Now, creating a network across which, as investors and consumers, employees and citizens, we can use that same framework to say, well, I care about these 4 a lot, I care about these things, I care about these 4 a little, and I'll care about these 4 later of the 16 SDGs. Really starts to blend our voices, so, whether that's Cyprus as an island, the European Union, globally, starting to get a real sense of that transparency, I think, is going to be key. And I suppose if you start with, these are my corporate investors, but then I've got an investor landscape that I could target if I understood what they cared about, I think you can sort of grow in different dimensions, essentially, across those. But I think it is key to make sure that you're using things that are already there rather than recreate the world, but just making sure that you're using that in the right way to connect, me as an individual, and the Cobalt example I used in small child earlier on. I need to know that when I'm buying my phone, I'm not impacting somebody else's life in a negative way or impacting the planet in a negative way. I can only do that if we join up what I care about with what's actually happening in the market.
So what it is basically trying to get that commonality of structure. So the argument and the competitive advantage isn't via the measures we use, it's by the actions we do against the things we already know is important. Is that a fair? No,
absolutely. And it's about creating that standard view. I think it's about creating the connectivity as well. But as you create the value pools, like if 90% of us care about climate action, that's a 45 trillion value pool. If companies start to move from on the framework, red to amber and amber to green, that might be a 20 or 30% increase in share price because they're accessing new capital pools. And it's the ability to link up doing the right thing from a sustainability perspective, which is what your investors and consumers care about, with actually increasing financial return and value and higher retail values because you're selling to a broader market because you're hitting what people care about. Actually, that then creates a framework for sustainable growth, but also creates a framework where the market isn't the most damaging force. At the moment, we don't price in all of the things that we should be caring about. This prices those in with value pools. That means that as you move forward, you're actually creating something that is protective. You know, it's protective of the planet and protective of society.
Okay, and I think that's great. And I think that consistency is something that we should all be striving for. But can I come to you, Natalia, first of all, and say, that's brilliant for the future, but actually you're sitting on boards now, a large corporate industrial combine, a regional airline. The year that they've had has been quite traumatic. So when you think about ESG and you think about the stuff that you're actually dealing with day to day, how are you addressing that?
I think all the corporates that I'm familiar with look at ESG from a risk perspective, as well as from an opportunity perspective. So when we sit in a board and around a boardroom, it's very important to think about the fact that the disruptions we've had have been unprecedented. But then on the other hand, we've had to look at risk holistically, and from the beginning. The airline industry came to a standstill because of the pandemic, and that's been a global phenomenon. On the other hand, though, it's given opportunities to corporates like the airline sector to look at their human capital chain, to improve controls and processes. At the same time, they've looked at fuel quality with a lot more time since the airplanes were grounded. They had to look at the value chain and how to improve the customer experience. On my other board, which is energy consumptive, they've had to think long and hard about the ways in which they can make investments that are value additive and hence expand this whole ESG proposition, but from a renewables perspective. I think it's what we heard before about the interlinkages that exist in terms of creating a circular economy and a value chain that actually is both purposeful and at the same time is really responsive to the SDGs. And so, is it easy? No. Are we all equipped with the magic answer to the questions that we're looking for, especially when it comes to the supply chain, which I think is very, very difficult to know. But there are ways in which we've been looking at I think in a very diligent way to put questionnaires out, to put KPIs out that keep us targeted in the way that we think that the major risks are going to come and where they're going to come from. Do we know all the unknown unknowns? No. But at least there is, for the first time since the pandemic, the diligence, I think, to try to sort this out. And so that gives me a lot of hope.
And did you find that an easy conversation to have at all? Were you a catalyst in that? How does that come about? Because boards can see, obviously, the COVID mess that's happening, and they can see all of the destruction from the climate change. But when it comes to, so what do I specifically do? We can look at, some opportunities in that. But how did that come about? Was that a serious board discussion? Was that we sort of think we need to do it?
Yeah. It's a good question. I think it comes from multiple directions. Our investors in investor roadshows are asking us some of these questions. And so when we present our results, we don't only present results anymore on a financial basis. The non-financial disclosure has become key. And so that keeps us very focused. On the other hand, I think there needs to be, and there has been, a need to look at the investments more than ever. It's very sensitive to how you choose to spend your money. And so unless a company does it in a way that's sustainable, I think even the financial results are going to be hurting. So the whole renewable sector, I think, has also expanded because of the way in which we value financial investments in terms of the long-term proposition. So you have discussions even with audit committees now that perhaps you wouldn't have previously. You don't need to have them just out of these sustainability committees and wait for the right opportunity to be identified. There's this intense dialogue between committees and among committees sometimes, even with risk committee if it comes to financial institutions. So it all has become a very, very active and kaleidoscopic, dare I say, discussion.
Yeah. Okay, thank you. Cleopatra, you also sit on a number of boards, travel and tourism, and a bank. Are you seeing the same issues, and how are they addressing the ESG issue?
Well, thank you, Jeff. Before I respond, let me just say a big thank you to you and David and Anton and Natalia as ambassador of INSEAD's Independent Directors Network We're classmates. So thank you for coming all the way to be here and contribute to the debate and lead it. You know, our learnings or governance at INSEAD have been life-changing or career-changing, but likewise are the friendships. So thank you. On our topic, I would echo Natalia's points, but add a few practical realizations. I think on both boards, I think there's been a realization that all board members need to be trained on what ESG is about. So there is a capacity building required at board level. So we all understand the same thing, what ESG is about. And once we have that shared knowledge, then we can begin to discuss how it is impacting, how metrics or how strategy or how risk, ESG-related risk, is impacting the way of existing models of doing business. Because what worked in the past cannot work now and is not working for the future. I think that's a realization. And then once we get to that point of common knowledge, we are having that discussion of the methodology of defining the trade-offs. And the trade-off is not anymore between dividend, profitability, and maybe socially responsible policies. The trade-offs are how we do business, how we manage working capital requirement to make sure that we have energy-sufficient systems. How do we look at our supply chain management and make sure that whether it's human rights or access to markets, if we want to do more business or attract capital investment. So these are the types of trade-offs. And then there is the other realization of remuneration. So ESG is mainstreaming on REMCO, on remuneration committees, and is performance measured in the right way? Is it just profitability and shareholder value? And what the metrics should be about. Now, we don't have all the information that we need, and as David said, we're in the process of getting an IFRS for ESG type of thing. So we are at the beginning of a journey, and there isn't a right solution for all sectors, so each sector will need to find its own way forward. But it's the beginning, and it is mainstreaming in the board's agendas, I can say that.
Yeah. And I think for those enlightened boards, it is going to end up being not a policy statement, it's not a separate committee, it's a way of doing business, it's a thought process. But without those metrics currently, do you feel that it's almost a leap of faith for some boards? Is that where you're?
Well, in the tourism and leisure industry board that I'm on, it's still at the beginning. We're still at the beginning of the conversation on mainstreaming ESG. But what is happening is that outside pressures, for example, the larger tour operator we work with, imposes certain metrics. And we issue a sustainability report that aligns to our major tour operator relationship. And also our customers. We see a lot of customers doing online bookings that want to see how the hotel uses plastic bottles in bathrooms. And do we have recycling? And, you know, so it's very much a bottom-up approach. Or, you know, outside in. You know, your major shareholder or your major business partner will push change to happen.
Okay, thank you. Anton, can you hear me? Welcome. The things that you've just heard, so Anton, you advise governments, industry bodies, lots of potential influence. But are you, the things that we've raised here in the corporates, are you seeing the same things across Europe, across the rest of the world? And what are you advising those boards, certainly the boards that are more at the start of the journey?
Well, I'm saying to people, listen, the future is going to be hybrid, it's going to be messy, it's going to be complex. And all these efforts to try and make the future static are not going to work. So it's good to try and define ESG and try and make it common to everybody, but it's not going to work because everyone is in a different part of the journey. Different part of the journey in terms of redesigning something. Most of the permitting and procurement systems, we heard about procurement earlier, are about retrofitting an existing system. What ESG is about really is a multi-stakeholder, initiative here that is addressing a major governance gap. And the governance gap is being addressed, one, by coming up with a price for carbon, and that in itself creating an incentive for major innovation in society. So these two things are impacting all our boards and all our CEOs. Whether they're in Malawi, whether in Australia or in Russia, they're all grappling with the same thing. What's going to be the price of carbon? And how do I innovate? Have I innovated enough? Who would be my right partners? Who are the clients who expect me to be innovative? And therefore, this is not about carbon at the end of the day. It's about energy, right? So what is going to be the price of energy so that those industries that can be competitive in future can stay competitive and be part of the next 100 years, and those who will disappear because they were built on a system that is no longer affordable. So ESG as such is something for the transition, for the moment. But the opportunity here is to address those trust systems in procurement, in permitting, etc., and redesign, therefore, the equation of trust. And that is, I think, what ESG actually produces here. What is going to be that number with which you can divide cash flow so that you can define a trust equation that society can live with and say, okay, and these companies know what they're doing and I can invest in them or can buy their products. This is a very much, as everyone has said, a consumer-driven process. Thank you.
And so I'm really interested in that concept of changing the trust dynamic. I thought, and the way you picked out that the way we value things at the moment is the revenue stream divided by the risk of doing business gives you the future outcome. And that idea that risk just hasn't been fairly represented because we're not looking at ESG. So when you get to boards and you try and advise boards on that, you need to rethink how you're viewing risk. What are the things that really trigger their imagination that gets them to get the message and to start thinking? Does it vary by industry, or is there something that really triggers their imagination?
What is common is the following: to say that if you look at ESG as a multi-stakeholder process, it is quite different from what perhaps elites want. And when you're on boards, when you're with CEOs, you're kind of members of the two clubs. You're somehow part of the elite that can be very disruptive and can be leading the denial, right? And we've seen in recent years that the denial has delayed the ability to respond to climate change. And that was elite driven. So the trust perception here is about very much the self-interest. And we've seen in the last 20-something years, successful efforts to delay change. And now there is this sense of urgency. Now we hear about 8 years, and this, if we don't change now, the world will stop. But the world will not stop. But of course, it will be much more difficult for those who don't have the instruments to fight it. So what do company boards and CEOs understand is that, in fact, they're dealing with two different constituencies here. One is a wider piece, which is from consumer to your investor to your financial services provider to your regulator. And the other is something that is not always that transparent, which is, the interests who sometimes do not like to be in a rules-based environment. So that's quite interesting. In fact, Fit for 55 is Fit for 55 set of rules to make a rules-based environment to deal with this crisis, the crisis that we're dealing with here. Thank you.
Okay. And I'll come on to ask all of you just for a quick comment on the next, but I'll ask you first, Anton. Culturally, how important is it? So when you look at the boards and the boards that are most successful, are you seeing that those are the most culturally diverse? Certainly the gender equality, we've heard earlier today, how important that is in mediation from everything. I think it's absolutely critical on most boards. But what's your view on that, and how do you encourage that?
I think the most important criteria is not to be asleep at this time. So if you attend a board meeting, just don't sleep anymore. There was a time when things were done for you by others, and you basically needed to warm the seat. That time has gone, irrespective of gender, irrespective of color, irrespective of nationality, wherever you are. Do not be overwhelmed. Start with something really simple. Your understanding of ESG does not need to be the most sophisticated thing in the world. The ability to focus is important, but when you focus too much, you lose the periphery. And we are at a stage where the periphery is really important. So the ability to, yes, say to the child, do not speak to strangers, do not stop on the way back home and talk to anybody, is important to get home on time, but you miss many opportunities. So what you need at this time around boards is actually people who do stop somehow on the way and look at a newspaper or talk to a stranger, and look at the eyes of people on the side of the road, because it is periphery that will protect value in companies, not just the focus. So do not overdo your ESG framework of issues, because it is fast changing. You're not going to be able to make it as static as the set of books that I have behind me. Those have been written. That's static. The future is now, and it's still being written as we're doing it. So there are limits of what you can capture, particularly when it comes to concepts. Concepts are not, they're not the same thing as a number, right? So you cannot count them, but you cannot discount a concept. And governance is exactly that kind of.
Perfect. Thank you for that. I'm sorry to interrupt. I'm very conscious of the time, and I would like to get that flavor, because the idea of culture being important in making structural change, because we're talking about significant structural change. Firstly, Cleopatra.
Well, it's what Anton said. It's not, it's the periphery that matters. Before, it was all very focused on numbers, profitability, shareholder value. Now we talk about stakeholder value. And what it really means, do shareholders want to operate and sell products in societies that are riddled with insecurity, divided, conflict is around, citizens feel unfairly treated, there is inequality of opportunity? Who wants to sell a product, or who will be able to buy a product or a service in a society that is riddled with all of this? So we better shape up as leaders, as board members, as politicians. We have certain issues that need to be addressed. Climate, inequality of opportunity, gender imbalance. We have to fix it. And this is what ESG in real terms is about. And as Anton said, it's about looking at the periphery and mainstream it, rather than focus on the numbers and the narrow interpretation of that.
Thank you. Natalia.
I agree with Cleopatra. It's exactly about the periphery, and I guess the way I look at it is more about the alignment between a whole host of different standards. I mean, the geopolitics have become so complicated and so disruptive, and they need to occupy our times in the board. On the other hand, societal expectations have also become truly important. Consumer trends have skyrocketed in terms of what investors are willing to tell us that they care about. There are a whole host of industries that are in transition, including oil and gas, pharmaceuticals, the cigarette industry, and they're all transitioning to something. And I guess for us, it's important to find the interlinkages between what good looks like and what better looks like. And it's important that the culture of an institution or of a corporate finds exactly the opportunities where we can actually drive value for the end consumer and for the consumer of the product that we create in a way that is sustainable. That requires incentives by the community, not just penalties. Otherwise, we're going to have people become disenfranchised, and we don't want that. We don't want the industry to become disenfranchised in front of regulation that becomes insurmountable. So it's all about getting everyone to participate and to realize that in the world in which we live in, there are profits to be made, but ultimately the purpose is going to lead the corporates to the right results.
Okay, and David, I mean, if you can put it into a framework as well, I'm very keen to be able to try and understand.
I suppose, the culture is not just almost at the company level, it's also at the market level. It's at the investor and consumer level. It's actually how do we all think differently about the behaviours we're going to take forward. I think if you see the issue as a systemic market issue, so the fact that the actual ask of the market has changed, I'm now asking the market to protect the planet and society, whether I'm a consumer or an investor, then we shouldn't be competing on that. We should be collaborating around what that framework might be. So it would be, if you think about the equivalent on the financial data, it would be like the big four accounting firms competing on how to present the IFRS balance sheet. If PwC decided not to include liabilities because that would attract a load of clients, and EY decided not to include costs, we'd essentially be in a position where we were competing on what should be a standard and what we should be collaborating on. And we all know that that would be an absolute disaster and destroy trust. However, that's exactly what we're doing at the moment on ESG. We're all creating our own versions of the truth. We're creating things that we can't collaborate and compare. We're making it really difficult for investors and consumers to understand. And so actually taking a bit of a step back and thinking about, well, our market share will stay roughly the same, whether we compete on this or in terms of the frameworks, or we collaborate. If we compete, we destroy the planet. If we collaborate, we save it. So collectively, I think there's a piece here around the culture of the market and the way that corporates sit within that, and how therefore we almost shape the future together on the bits that we should be collaborating on. And I think there are some example frameworks that are now starting to take shape where they are looking at bringing together the investor side, the consumer side, and how that then links into the organizations and their supply chains. I think if we could start to coalesce around some of those, and it might be that, let's not let perfect get in the way of good. We might need to have some things that enable us to get a real understanding of this that matters to individuals. But I think if we get that cultural shift right, with a view to doing the things we need to do to protect the planet and society, actually the market will shift in the right direction and provide the protection that the planet and society need. So I think, I don't know, is that... I think
that's great, and I'm very conscious of the time as well. But I think the discussion and debate, and the thing that I find incredibly uplifting and listening to this morning, is that I think Cyprus has an enormous opportunity. When I see the collaboration and the coordination of activities that actually go on right here, right now, if we can add into that the voice of the people, really genuinely understand what it is they care about, and not just here in the south, but in the north, and you get a joint set of we the people believe X, not just the politicians or the industrialists or the elite, but everyone, then that commonality of this is what we want to do as a nation becomes a possibility. And that, for me, is a really exciting opportunity. I just want to say thank you to the panel. I think we've had some fantastic insight. And I really look forward to coming here next year and seeing the significant change that we've had. Okay. Thank you very much.
Thank you, Anton.
Thanks, Anton.